This tutorial is a project of nonprofitaccountingbasics.org, a free resource developed by the Greater Washington Society of CPAs Educational Foundation. Our goal is to encourage accuracy and accountability to help smaller nonprofits successfully manage and sustain their organizations.
Welcome to Internal Controls Part 2. I'm Eric Fraint, President and founder of Your Part-Time Controller and a member of the Greater Washington Society of CPAs Nonprofit Financial Accountability Task Force. Today's webinar, Internal Controls Part 2, will take a look at a practical guide to understanding that too many internal controls can be a bad thing and that no system of internal controls is perfect. In part 1 of our internal controls webinars, we explained what internal controls are and why they are needed. But again, it is possible to have too much of a good thing, and we will explain why. So in this seminar, we will discuss how too many internal controls can actually be more costly than the risks that they are designed to safeguard. And finally, that no system of internal controls, no matter how well designed, can be guaranteed to work perfectly. So I've divided this discussion up into what I sometimes refer to as 6 basic truths of internal controls. 6 basic truths. Depending upon how you'd like to divide them up, you can come up with more or fewer, but 6 basic truths. Number 1, basic truth number 1, different sized organizations need different controls. So a system of internal controls that is right for an organization at one size will likely not be adequate if the organization experiences substantial growth, or for that matter, if it should shrink substantially. For example, the internal controls that were appropriate when $100 were at stake are not sufficient when thousands of dollars are at stake. Think about perhaps if your office has a petty cash box in the office. The controls that you need around the petty cash box are nowhere near the level of controls that you might need over your investment portfolio or your main checking account. As the dollars increase, the complexity of the controls increase. So that's basic truth number 1. All right, basic truth number 2, the law of diminishing returns. Internal controls cost money. Every time you add an internal control, there are additional costs that the organization will incur. And you have to thoughtfully consider whether the benefit is worth the additional cost. For example, imagine a museum that has a suggested cash donation box as visitors walk in the door. And at the end of the day, somebody has to count the cash that has been deposited. Well, imagine that if you have one person counting the cash, you could in your own minds decide what the probability is that over time, perhaps that person might pocket some of that cash. Perhaps there's a 50% chance that over a period of time that someone might take some of that money. Well, so you decide, let's add a second person. Adding a second person now to the counting of the cash reduces your odds of a fraud perhaps down to 5%. The additional cost is now you are paying 2 people to count the cash instead of just 1. Well, all right, that sounds like a very appropriate internal control. Suppose though you decide, well, if 2 people are good, maybe 3 people is even better. Let's add a third person to count the cash. Well, adding that third person may only reduce your odds of fraud from 5% down to 3%. You now have to decide, is it worth the cost to your organization of now having to pay the salaries of 3 people for such a potentially small improvement in your control system? So the law of diminishing returns. Basic truth number 3. The benefits of adding an internal control are often unknowable. Right? We simply don't know sometimes in advance how important it is to add an internal control. The expected benefit is oftentimes difficult to know or to calculate. For example, in our previous example, how much are we really saving by adding more people to count the cash? What if we instead install a security camera? Is that worth the additional cost? We really don't know whether the benefits that we will achieve, we really oftentimes don't know whether it's worth the additional cost. We've done work for a municipal organization, a library. In order to pay a bill, the vendors have to submit a statement with each bill saying that, yes, this is our bill, and yes, this is correct in all respects. Somebody at the organization has to approve the bill. Somebody else has to approve the bill again before it gets entered into their accounting system. Then they have to print a list of all the bills before they're paid, and that has to be signed by a member of their board. And then on all the checks require 2 signatures. And then finally the check run has to be signed. And there's actually another step or 2 in there. Well, I think you can see that here is a case where internal controls have run amok, and the additional benefits of all these additional controls are not only expensive but unknowable. And this leads us then to the issue of bureaucracy. As the previous example illustrates, it's possible to go overboard in setting up internal controls, where the costs are so stifling and the bureaucracy is so large that it actually can prevent an organization from getting work done. Who is, for example, has not experienced the frustration of excess bureaucracy and red tape when we're working with or dealing with government agencies? We see examples where people try to circumvent the policies of an organization because they're so stifling that in order to get things done, you have to do an end run around the policies of the company or the organization in order to actually get work done. So if you go overboard in internal controls, you're going to add to the bureaucracy of your organization. Basic truth number 5. Reasonable people and subjectivity. Reasonable people can and will disagree on the proper level of internal controls. I've sat through a number of, quite a few meetings at boards, for both boards that I've been on and also for our clients, where there are discussions about what level of internal controls are needed. A classic one is the example of check signers. Do we need 1 check signer, or should we have 2 check signers? If we have 2 check signers, do all checks need to be signed by 2 people? Does a $100 check need to be signed by 2 people? What about a $500 check? What about $1,000, and so on? People could disagree about what the appropriate level of internal controls should be, what the level should be in terms of when a second signature is required. I think all people would agree that we don't have to have 3 check signers on our checks. I don't know that we've ever actually encountered in any of our clients a situation where 3 signers were required, but I'm sure somewhere out there are probably organizations that could possibly require that. So understand and recognize that reasonable people can disagree about the appropriate level of internal controls. And certainly, as we mentioned earlier, as your organization grows, the controls that are appropriate for you today are not necessarily the controls that are going to be appropriate for you as you grow. Truth number 6, no system is perfect. No system of internal controls, no matter how strong, can guarantee to prevent fraud. There could be collusion where 2 or more people get together to decide to defraud the system and steal money one way or another. And over the years, we've seen a lot of very creative ways that people find in order to steal from their organizations. We sometimes wonder that if they had applied that same level of effort and creativity to their jobs, they would have been doing a much better job as a result. But recognize that there is no system that's perfect. Things are going to happen no matter how thorough, no matter how strong you feel that your system of controls is. So those are our 6 basic truths. If you need help with internal controls or anything related to this or in any other nonprofit financial matter, I encourage you to visit the website sponsored by the Greater Washington Society of CPAs. It's called nonprofitaccountingbasics.org. There are many articles and videos on that website. And of course, if you need some additional help, feel free to reach out to me, Eric Fraint, president and founder of Your Part-Time Controller. Thank you very much.